So, good day, guys. Welcome back to the Flow in the Order course. Uh, in our previous videos, we explained a few things. So, I think we used USD JPY in our last session. So, today will be on gold, XAUUSD. I'll be explaining the similarities and understanding the basics uh, of the strategy for each pair and how to make profit from, you know, trading the scenarios, trading the flow in the demand and supply of every pair. So today we'll be on gold and we'll be looking at a few examples. So I'm going to give a recap on what I've explained so far in our previous sessions. We explained something like uh, having a downtrend like this, right? And something like this for continuation. And we have a break here. And then we have quite low here and a low here, right? And then we have a break here, which is more like a shift, right? We have a shift here, right? But then it happened that price broke through it. So it means that this level where price was supposed to, go up, price broke through it. Then we mark out 50% of this level, and then we take a sell from there, right? That is the continuation. And for the buy as well, for reversal, say we have something like this for reversal. We have something like this, meaning that price has been like this. For example, let's say this is more like a demand level, right? This is more like a demand level, and price kind of like tapped inside here and then came back inside of this level. So we kind of like have a a break here, more like a tap out to tap a liquidity, and then we have price breaking the high, and after that we take 50% of this level with Fibonacci and also continue to buy. That's a reversal, right? That's the scenario we explained in our previous session. So we'll be looking at that on gold and just to further understand the process and all that. So, so this is gold for our chart, and we'll be looking at the examples here. So basically, we've got a few examples here, right? So we'll mark out, let's say we pick the rectangle and then we mark this demand, right? We're marking this demand level, right? So what we want to do, or what we want to see basically, is that we want to see price tap go into this demand level, right? And then a little bit push up and come back down to kind of like tap liquidity from using the lower type. I'll explain in a minute. So tap out the previous tap of the previous point of entry on the demand, and then it taps it out before going back up to break the previous buy level. So I'll just switch my time frame from uh 4 hours to 1 hour, yeah. So now we explain this better here. Okay. So now, so this is the demand level from the 4 hours time frame. And we can see that price has actually tapped this level. It has tapped the demand level, right? It tapped the demand level and it tapped it out and kind of like that's kind of like where it tapped, right? This level is this mini buy here, right? That's where price first tapped the demand level, and then it went back inside. This is not a point of entry. I'm not going to buy gold from there. I'm going to wait for further confirmation, right? So now we've seen price kind of like tap out the liquidity and then went back deeper inside the demand, right? It went back deeper inside this demand before finally going up. And the point where I consider this level a valid demand level is when I see price now break the top of the first level that's kind of mitigates the major demand level. So I look at this level as a break before I first try to know that okay, as this level, the first point of entry, has it been taken out by the sweep or not? So I want to see that happen. And to see that, what I do is that I don't usually use candlesticks, right? Like I explained before, I don't use candlestick. I use line charts, okay? Because this week's are most likely not the right pricing, right? They're not likely the right pricing. So I kind of like try to switch back to line charts, and then I try to look for the eye that has been taken. Okay, so now we've got the eye here. We know that okay, this eye has been taken, right? The eye has been taken. One sec. Oh no. So we know that the eye has been taken, right? Has been taken here. We can see this level that the eye has been taken. So you can then switch back to the candlestick, right? Now we can see that price has tapped and has taken the eye. So we just need to mark out 50, kind of like 50% of here to this low, right? So we use our Fibonacci retracement level and we mark a level like this, and we kind of like take it like this as well. So, so, so mark out the 50%. The 50% is about this level, right? But price rate and tap go into it. It happens sometimes, sometimes you just don't get, you know, don't get it. You just kind of like enter manually sometimes. But the concept is still right, right? Because sometimes your trades will not get activated. It doesn't happen all the times. Maybe once in like 10 times or so. So this is valid still. So we kind of like just take out and let's say we mark the 50% here. And that will be kind of like our point of entry, right? And we wait for price to get here. I mean, if you are aggressive, you can start taking your position about 7 pip or 10 pip. Yeah, 10 pip to entry. You can start taking your positions as well. That will only be that you're exposing to more stop loss level. And for a scenario like this, you just know that your stop loss is just below here instead of here, because we have kind of like we have kind of like we have a kind of like a sponsored level here, which means that this level needs to hold without having to put stop loss below the major level, right? So we can just do this. This is what I'm trying to explain. So this is basically what I'm trying to say. I'm trying to say that we can like just post stop loss right below this level of demand. And instead of putting it here, we just put it here because we know for sure that price is not getting below here. It has already taken almost all the demands in this candle, in this engulfment. then it goes up. So we know for sure that price is not going lower than this. So we just have to do that, right? And then we target the eyes. Yeah, that's our first target, right? So that's about 11 to 1 still. So the stop loss is why that's because gold has been moving really, really well these days. It's been moving 100 pips. Sorry, it's been moving 1,000 pips, 1,005, 600 pips, 500 pips a day. So it's why the positions are of heavy stop losses and all that. So that's that. That's the first entry. So just going to show you another scenario here. Uh, let's see if we got another scenario of a low taken. Okay, okay, okay. So yeah, basically you can even see that from the hour time frame. You could just pick this level, right? It's much more the same thing, just that the lower time frame will give you a little bit of entry to avoid higher stop losses. So you can see that we have this level of demand, price tapped it, but it kind of like tapped this low and then came for this level, this demand below, and then went ahead, broke this first tap of this demand, and then it came back inside of this demand on the 4 hours and it started pushing up. So basically that's it. Yeah. So let's kind of like look for another example here to just, explain how it works even better. Okay. So we've got another example right here. We've got another example right here, but it's not really clear on the 4 hours. So I'm going to move to the 2 hours time frame or 3 hours. Yeah. So you understand very soon. Just one sec. So let's see. We've got like this level here, right? We've got this. I think I actually picked this trade. I picked this trade and I posted it. So we've got like a high here, right? Sorry, let me use that. Let me use something else. So we've got like a high right here, right? And after this high, what we want to see is we want to see what happens. We want to see what happens here, or we want to see what happened. So we keep going to the lower time frames to spot, entries, to spot regions where we can, kind of like understand better. So here we've got this high, right? But you can see around here that we've got another week, but that's like clear on the lower time frame. So that would be probably on, yeah, on, I think, yeah, it's clear here. So we've got this high. So we've got this high, right? We've got this high, right? So and we've got this as well. So we want to see two things. We want to see how price reacted to this break, and we want to see how price happened to this as well. So we just keep going to the lower time frames to see the regions, to see areas we are interested in, right? So now we've got this level. This is 5 minutes time frame, right? Yeah. So you can see that this level, yeah, this level here, kind of like have it tapped out the high. So that will kind of like be clear on the lowest time frame. So hopefully I'm still able to, check this out. But I think I should be able to. Oh no. Okay, so let's go back to the 3 minutes. Let's just use the 2 minutes like that. Okay, so this is it. This is what I'm trying to explain here. So sorry guys. I don't know what's wrong with my trading view today. It's just acting really weird. Anyways, my point is that this has been taken up, right? And because we can't really go to the 1 minute time frame, we just see this level, right? Or we can do this instead. Okay, let's just do something like this because of what was it called? So let's just do this instead. So let's do this instead. So we can just mark this supply, right? Let's mark that supply. Now that we've marked the supply, we just want to see something. Yeah, we want to see area where the highest level where price kind of like stopped before. Let me explain. Let me use an illustration. So this is what we are looking for. We are looking for price where price entered the supply level, came down, went back up to tap out the previous high, right? And then came back down. So we're looking for something like that in that supply. So let's see. So let's assume that we go back to the 5 minutes here. So I think this should be enough. So yeah, so good, guys, great, very good. So now we can see that this is the last point. Okay, this is like we've got like price at that supply. It kind of like start pushing with heavy sales, right? Heavy sellers start pushing in, but that's not the case. Price still went ahead to the upside, and then after getting up, it then dropped massively. It then dropped massively, right? After dropping massively, we consider this level as a break into the level, and that is considered valid for sale, right? It's considered valid for sale here. And then we cannot use the fib level to mark it out like this and kind of like take 50% of it. So you can see kind of like take 50%. This is like the same thing, the same scenario I explained previously on the buy that did get activated on 50%. But this is another level here that's gotten activated. And we are only risking this is 3248 to about 5 and about 40 pips. Right. I think I got this trade and I shared it, right? So it's as easy as that. So now, after getting that level, you're gonna go back to your 2 hours time frame, and that's it. It's as simple as that, guys. So now, imagine that you've got like sell from this level inside that point, and you just kind of like mark it down to the lowest bare minimum, and you do this, and you get about 18 ratio, 18, 18 hard here. So it's as simple as that, guys. It all depends on how you see it, how you view it, how you want to pick it. Do you want to pick it on the higher time frames and wait on the higher time frames and catch pips like 1,500, 2,500 pips? Or do you want to check entry, get entry points, entry levels on the higher time frame, then go to the lower time frames to pick entries, like to kind of like look for entries and make sure you like get on it and make your quick 13 hour, 14 hour out of it. So it's as simple as that. I mean, I can keep showing you examples here. You just need to find recent highs or highs, more like peaks and troughs. Yeah, that's what you're looking for. You're not really looking for anything complex, anything complicated. It's as simple as A, B, C. So all you need to do, look for trend market, look for recent high, look for ways to get continuation. I already explained all these things on the previous video. So it's all about how you want it, what you want, or what is your trade ideology like. So if your trade ideology is to pick on the hour time frame and wait for days or months, you can do that. I mean, it's available on even the weekly time frame. So if you pick days on the weekly time frame, you're looking at months as targets, right? But here you get on the 4 hours, you move to as low as 1 minute time frame to get sniper entries. Not sniper per se, but it's still sniper, but to get lower risk trade with good reward. So it's as simple as that. So I'm going to end this session with the two examples I dropped, and I hope this helps you understand it more. So the next session I'll be using um, another pair, probably Euro NZD. I'm not really sure yet, but let's see how it goes. I wish you guys good luck and good trading. Thank you.